Hey folks, welcome to the Mortgage Update with Dan Frio. I am Dan Frio. Today is July 14th, 2021. And today we're going to go over what Federal Chairman Powell said in front of Congress. Good news. And you're going to like what happened with rates today as well. So don't go away. We'll be right back. So Federal Chairman Powell was in front of Congress today, and let's just go over one question he was asked from a representative in Wisconsin about the housing market and inflation and what the Fed's thinking about with mortgage rates.
So let me build on this discussion. I want to just build in here to the distinction between the transitory and persistent inflation, in particular as it impacts home prices. According to the Case-Shiller Index, home prices have risen more than 14% over the past year. That's a very significant increase. And it's enough to put home ownership out of the reach of some Americans. Meanwhile, the Fed is continuing to buy around $40 billion in mortgage-backed securities. And here's my concern. If inflation is, in fact, as you suggest, temporary, does the potential abatement of inflation present a potential for a reset of housing prices? And if so, what are the likely impacts both on homeowners and what will be the impact on the Fed's MBS holdings?
So housing prices, as I'm sure you know, don't go directly into inflation. That's an asset. Housing is an asset, and housing prices, that's not a factor in inflation. What's a factor is rents. And then in effect, what the economists do is they take the value of a home and they impute a rental cost to that and they add it in. It's just the way they do it. So, housing prices, they went up overall 15% last year. That's too much. That's much higher than would be a normal level for housing prices to go up. I don't know what housing prices will do in the future, but there's just a lot of demand. People want to live they want to live in the suburbs now. They want to move out of cities. They want bigger houses. They've saved all this money because they couldn't travel and go to restaurants. So there's a lot of demand. So even if mortgage rates go up, as they ultimately will, I think we'll be looking at a lot of demand. Then the question will be how much supply can be brought to the market. And that's really out of our control. But as you know.
Okay, you heard it there. Plus, there was more news that came out that said the Fed, they don't plan on doing anything until inflation is here to stay. So they're saying, okay, it might run a little rampant right now, but we're going to wait basically till the end of the year, first quarter of 2022, and then we'll figure out what we're going to do, unless things just kind of the roof blows out. Okay, so that's what's going on in with the Fed news. And that controls a lot of the market. When Federal Chairman Powell speaks, people listen. So let's get to the headlines for today. First thing you're going to see is right here. Powell says the Fed is still way off from altering policy, meaning they're not going to taper back on any of their mortgage-backed security purchases. The next thing is, this is more news out. The Biden administration just reached a deal for $3.5 trillion on a new infrastructure bill on top of all the other stuff going on. So guys, what does this all mean? Well, it's the devaluing of the dollar and higher inflation and so forth, but we're going to worry about that when the time comes. So right now we have the news that came out today. This is on the producer side, what inflation looks like on the producer side. Yesterday we saw the consumer side, which was pretty hefty, but today we're seeing the producer side. So last month was at 0.7, consensus was 0.5. We doubled that at 1. Okay, so that's not good news. Month over month, year over year, the last month we were at a 4.8 increase. The consensus was 5.1 and we came in at 5.6. Higher, but not blowing out numbers. Producer price index for this is month over month. The one up here was excluding food and energy. Now we have food and energy added in there. Last month we were at 0.8. The expectation was 0.6, and the actual came in at 1%. So a little bit hotter than expected. So that's where we are here. So the consumer side of the inflation index is way up there, but we all think it's transitory. And then on the producer side, it's not as hot as it is on the consumer side. So tomorrow we have more things like import prices, but what we're going to focus in on tomorrow is job claims or jobless claims, if you want to look at it that way. And I'll post tomorrow afternoon as soon as this information comes out and let you guys know what's going on. But the good news is, kudos to Federal Chairman Powell. He did a fantastic job in front of Congress today, and Wall Street was watching it, and they congratulated him with a nice uptick in mortgage-backed security prices. Okay, so if you follow me on a daily basis, we watch this. Why do we watch this? It is the biggest component or factor in your mortgage rate. Okay, I can guarantee you almost 100% that your mortgage advisor doesn't watch this. Okay, so if you're dealing with a company that isn't watching your rate, please work with us or call us. This is what we do. We want to make sure you're in the right program, right fee structure, and lock in at the right time. So this is what's going on right now. So the chart on this MBS is this chart right here is the quarterly chart. So what we see here is when this goes up, let me explain this. When the price, this is what's going on with the price of the bond. All right. So mortgage-backed security is a bond that trades on Wall Street. You might have it in one of your investments. Okay. As the price goes up, what happens to mortgage rates? And if you guys watch my channel on a daily basis, you know this. Prices up, rates come down. So there's an inverse relationship between the price and the yield basically would be your mortgage rate. Okay, so that's the best way for me to explain it. So we love when the market rallies, but the concern was, or the problem is, every time the Fed says something, we got to be really cautious. So back in May during the Federal Reserve meeting, everybody thought because of inflation, everything was going to go kind of crazy. So we had a spike in rates. So remember, when this goes down, rates go up because this is the price. And then we ease back. And then we had a little bit of normalcy. And then all of a sudden we had the next meeting. What happened? Same thing, same fears. It's the same fears over and over and over. It's like insanity. And then what happened? We rallied back. And then the rally went all the way up there. Look at this. We actually exceeded, this time period here. And we're basically back to rates back where we were in May. Awesome. And then there was a little deterioration in the market because inflation fears rolled its ugly heads back. That hits the news. So it's a lot of mainstream media feeding the agenda. Okay, so then what happened today, Federal Chairman Powell came in and said, you know what, guys, we're not going to do it. We have no thoughts of changing anything with our stance. So what happened here today? So this is the chart for the day. We opened up and we rallied a little bit. But then my concern was when he speaks around noon, what's going to happen? Well, the good news is we kind of rallied all day long and we are up 25 basis points. Okay, so that's what's going on. So we had nothing but good news today, and the economic calendar wasn't anything to shock the system. So what happened with rates today? So what happens is Black Knight, this is one of the country's largest analytical companies, they go out there and they survey mortgage lenders all over the country, and we're one of them, and we send them our mortgage rates. Okay, so these are not my rates, these are the national average. Why I post the national average and not mine? Because they're on a 30-year conforming loan, there's probably 1,000 different factors involved that would change this rate. So this is basically just a completely generic rate. So what I'm trying to get to is if your rate is way higher than this, that's bad English, much higher than this, be concerned. But don't be completely out of the ballpark because it might be you have a very low credit score, or you have a high loan to value, or a combination of the two, okay? What I'm getting at though is if, please let us know if your rate that you're being quoted is much higher than this. If it's much lower than this, kudos to you. You might have fantastic scores and a big loan and so forth to fit that agenda. But what I ask you to do is please watch your fees, especially the lender fees. That's what all of us lenders control. What a lot of lenders are doing right now is they're jacking up the fee. They're not charging you points because people are starting to learn about how to question points. They're just charging you excess costs. Okay, so that's one area to be concerned with. But right now, the 30-year conforming, jumbo, FHA, and VA are right here. We got 3.14, 312, 322, and 2.75. Now we have a 1-day, 7-day, and 4-week delta. Delta means change, okay? 4 basis points. In numerical math, that equals 0.04. Okay, so 4 100ths. All right, so that means if it's up 4 basis points today from where we were yesterday, that means yesterday we were at 3.18. So I hope you get it. So within a day, there wasn't many changes here. However, these rates are yesterday's rates, okay? The 20-something basis points that were up so far today in the mortgage-backed securities market is not posted in these rates because these are from yesterday's data. So tomorrow's data will represent these. You'll probably see about a 5, 6, 7, 8 basis point reduction in rates across the board tomorrow in this area here. 7-day delta, 4-week delta. Again, delta means change. So within the past week, we've had basically no change. In the past month, no change. And you can even see the chart above here. We're back. These are where rates are. You can go back and see, well, we were back in these ranges back, let's say, back in September of last year and so forth. So there's nice stability in the markets. We're getting back to where we were over here because there was a rally up in rates, but things are looking good. So what I ask you to do is I hope you like the video. I'm trying to make them short, sweet, and to the point. Don't forget to give me a thumbs up. Subscribe down below. Hit the bell so every time I post a video, you get an alert. If you're looking to buy, refinance, or even do some renovations, we just came back out with our renovation program. There are FHA 203K loans. So if you're looking to put in a pool, put in an addition to your home, and so forth, we can help you. So the best way to reach out to the Frio team and find out more about us is just go to therateupdate.com. And you're going to come to this page. We're having a lot of features being added to this on a daily basis. But what you can do is if you're looking to buy a house or refinance a house, you can click here and it'll put you into a questionnaire. Answer those questions. It's going to take you maybe 5-10 minutes at the most. And when you answer those questions, be as specific as you can because that helps us guide you into the right program for your needs. If you just want to say, Dan, I need your help. I like what you guys are doing. I want to apply. Click the apply now button. What it's going to do is it's going to launch you right to my team. You can pick anybody on the team that if you talked to in the past. If not, you can default to me and apply now. So that's the best way to do that. If you want to check out all the videos that we have to offer and so forth, you can hit the resource page here and go to the rate update. It'll give you over 900 videos that I've done in the past. And but one feature that most people do, especially in the evenings, they'll call us. We have an 800 number, 844-775-LOAN. And loan is 5626, or scroll down to the bottom. Almost the bottom, and you're going to get a calendar link right here, and you can pick between a 15, 30, and 60-minute consultation. You just click it, you pick the day and time that you're available, and it'll text me and email me, and it'll do the same to you, and then we'll set up that appointment either by Zoom or by phone call. So that is it for today, guys. I want to thank you so much for watching. God bless. I'll see you tomorrow. Bye-bye.